Gautam Adani, who was once a part of world's top 10 billionaires list.
Hindenburg Research putting out a market-moving call on Adani Group.
Adani Group.
Adani Group.
Adani Group.
Gautam Adani, a name that has turned the world of corporate upside down. Adani has managed to catch the attention of people across the globe. He is no less than the talk of the world. How do you think he managed to get the limelight upon himself? Why are all the news channels flashing his name? You would not want to miss this hot topic, so stay tuned to know the full story. Well, the allegations levied by Hindenburg Research to put light on all the dark activities lurking behind the veil of Adani Group shook its very foundation. Since the publishing of Hindenburg Research on January 24, 2023, Adani is at a whopping loss of $135 billion in shareholder wealth. The company's stocks are a complete chaos now, and Adani has tumbled down from his position of world's third richest man to 24 in the list. Hindenburg, in their report of no less than 106 pages, titled Adani Group, How the World's Third Richest Man is Pulling the Largest Con in Corporate History, confidently points fingers at Adani Group for major white-collar crimes like money laundering, stock manipulation, accounting fraud, corruption, theft of taxpayers' funds, and maintaining offshore shell entities. Why Hindenburg had to do such a thing? How will they benefit? What might be their end goal? To understand all the whys and hows, let me run you through these entities real quick. Hindenburg Research is basically an investment research firm based in the US who has this primary motive of targeting a company, taking a short position followed by earning profits. This company was founded in the year 2017 by Nathen Anderson. By profession, Nathen is a chartered financial analyst and chartered alternative investment analyst. He has a degree in international business from University of Connecticut, and before moving to America, he used to work as an ambulance driver in Israel. He started his financial career by working in investment companies. This is not all. The name of the company has a long thread attached to it that travels back to the past of significant importance. There was a German passenger airship back in the year 1937 with the name of Hindenburg. Unfortunately, it caught fire one day, resulting in the death of 35 people. Nathen considers this to be a man-made disaster. He believes that this tragedy could have been totally avoided considering the fact that the world already had seen such ill-fated aircrafts. Still, 100 people were made to sit in an aircraft filled with hydrogen, which is indeed the most flammable element. Nathen sees no difference between the stock market disasters and the Hindenburg tragedy. He made it the prime motive of his company to pull up the curtains over the bitter and covered truths of these companies before it's too late. Do you think these allegations against Adani Group is one of its kind? Definitely not. Before pulling down Adani Groups to the bottom, Hindenburg Research published 17 other similar reports on different companies that for sure didn't end well. Take, for example, Nikola, Wins Finance, Genius Brands, China Metal Resources Utilization, HF Foods, Bloom Energy, and many more. In 2020, Hindenburg published a report on Nikola stating that this startup has made all sorts of misleading public statements and portrayal about its technologies. This resulted in the resignation of the founder and executive chairman, Trevor Milton. Whereas the shares of Nikola took 2 years to crash down by 71%, it only took 2 months for the shares of Genius Brands to come down from $6.86 per share to $1.50 per share. Huge, isn't it? The point here to think about is, what is in it for Hindenburg? How does this company benefit from all this? Well, that's exactly when Hindenburg stands out. Being the short-selling firm it is, Hindenburg never backs down from short-selling the stocks of the companies it targets. Now, for those people who doesn't know what short selling is, let me explain you here. Usually, we invest in stocks keeping in mind the fact that when the price of those stocks will increase, we will be in profit or we will gain profits. But quite the opposite is the case of short selling. Here, profits are earned once the share price starts declining. Basically, in the case of short selling, one needs to be pretty confident about the fact that the company is going to crash down. But worst case scenario, if it doesn't, short sellers will have to incur huge losses that cannot be reversed. Despite the risks, Hindenburg takes short positions in the companies he publishes the reports about with 100% perfect predictability. It did short sell 43% of the shares of Nikola, which is literally almost half of the shares of the company. In case of Adani Groups as well, Hindenburg announced that they have taken a short position through US-traded bonds and non-Indian traded derivative instruments. What do you think? How can Hindenburg be so confident about their allegations? From where this confidence could possibly stem out from? No doubt they give entire credit to their extensive research work, but is this factor still justified enough? Do let us know in the comment section. Now let's dive deep into this long report that Hindenburg took 2 years to research for, and let's see how many of these allegations are actually concerning. Hindenburg writes in the report that Adani manipulated his own stocks with the help of Gautam Adani. In the past, SEBI prosecuted Adani Groups because he had links to Gautam Adani, which led to the conclusion that back in 1999, Adani Group sold shares to Gautam Adani, who in turn did circular trading. Now, what is circular trading? In short, suppose price of one share is $200, so both the buyer and seller need to pin the same price, i.e. $200. Once the price and quantity match, orders are executed. But in the case of circular trading, sell order higher than the prevailing price are put. For example, $250, $300, and so on. Then the same person will put these higher prices as buy order from a fake account, which leads to the increase in share prices altogether. This is where people like Gautam Adani steps in. He used to artificially increase and manipulate the share prices of companies like Adani Groups, which is why he was banned from trading in stock markets for 14 years by SEBI, though Hindenburg didn't provide any concrete proof for the same. But don't you think this completely justifies the exponential growth Adani Group had in their stock prices within the past 3 years? If we go by the stats, the prices raised by 2,300% and 3,300%, that too within a span of just 2 years. Hindenburg in their report voices Adani Group to be more of a family business since it is largely controlled by his family members. It questions the appointment of Richest Adani, younger brother of Gautam Adani, as the managing director of Adani Groups, despite given the history of being allegedly accused of forgery and tax fraud by the Directorate of Revenue Intelligence in the year 2004 to 2005. He was also arrested not once but twice. Next accusation was directed towards Samir Vora, who is Gautam Adani's brother-in-law. DRI allegedly claimed Samir Vora to be the ringleader of diamond trading scam. But then again, he was promoted to the position of executive director of Adani Australia division. Vinod Adani, elder brother of Gautam Adani, was dragged into the report as well. Hindenburg says that he is responsible for the creation and management of many different offshore shell companies in various countries and was involved in money laundering. The report explains this stance by stating that Hindenburg have identified 38 shell companies based in Mauritius, as well as in nations like Cyprus, UAE, Singapore, and several other Caribbean islands which are managed by none other than Vinod Adani and his close associates. As far as the report goes, many of these shell companies does not even have a legit website. Even if a few of them does, merely stock pictures are displayed in the websites. These companies neither have any employees nor any real-life address or phone numbers. Suspicious, isn't it? Moving forward, let's see what are the other serious allegations put forth by Hindenburg against Adani Group. As per Securities and Exchange Boards of India, SEBI, in any public company, at least 25% of the holdings should be held by the public. Rest of the 75% can be held by the founder and the promoters put together. However, the report claims that Adani is playing smart and is successfully able to violate SEBI's rules by holding more shares than he should be. He, along with his promoters, hold almost the entire 75% as well as a major part of the other 25% through the shell companies he manages. The most disturbing element Hindenburg tries to put light upon here is that even after being in the center of attention in a number of government investigations for crimes like corruption, money laundering, theft of taxpayer funds, and siphoning from listed companies that in fact had quite a few strong evidences, including bank statements, emails, witnesses, and invoices, Adani Group mysteriously manages to escape from this loop over and over again. For some reason or the other, investigation stops. This allegation qualifies in raising a genuine concern across the nation. Let's wrap up this entire heated-up discussion with yet another discomforting issue that the report tried hard to justify. In case Adani actually manipulated his stocks and increased the share prices artificially, then what value does the banks hold who have lent loans to Adani after Adani Group pledged its shares? Now that the report is out and the share prices have actually fallen, let's get this straight. The banks do not hold any real value, but only the inflated one. After the Hindenburg Report wreaked a havoc on Adani Group, they in turn defended themselves with an even longer report of 413 pages, which was published on January 29, 2023. Adani Group writes that Hindenburg Report was purposely published to harm the reputation of the company publicly, undermining the Indian institutions, which in a way is an attack to India. On 25th January 2023, immediately after a day of publishing the Hindenburg Report, the CFO of Adani Group, Jukshinder Singh, announced that the timing of this report seems a little off, and this has been published solely to damage the upcoming follow-on public offering, FPO. Throughout this entire video, that one thing we can be sure of. These are mere speculations, and nothing is yet proved right. We cannot be sure of these allegations. Maybe in the upcoming days, the truth will unfold. But do you really think one report could create this big a sensation in India and the rest of the world if it wasn't valid, at least to a certain point? Why do you think Adani has still not published any concrete answers in his defense against the Hindenburg Report? Does that mean Hindenburg could successfully let the cat out of the bag? Write down your thoughts below so that we can know what are your views regarding this video. We definitely don't stop here. We will continue to make such informative and debatable videos so that you can keep getting great content. If this video was worth your time, then please like this video and subscribe to our channel Quality Mainstream.